We'll just go live like that then. All right, welcome everybody. First of all, apologies to, everyone watching. We've had a few technical issues as we have basically been trying to set up this stream. First of all, the room that we were in order to kind of get everything set up, there were a few issues there. My microphone is just not working, so I hope everyone can hear me okay. I hope that the stream quality is all good. Yeah, anyway, welcome everyone. I'm very excited today. Hopefully this all goes smoothly, as we can expect. There may be a little bit of technical issues as we go along, as we get things going here. But yeah, very excited to welcome a couple of special guests onto the stream today. One of which you guys will all be, or those of you who are in the crew will be familiar with. Swooping Hawk is going to be joining us today. So Swooping Hawk is our resident harmonics expert, but we also have on the stream, and I'm very excited about this, so I really do hope that things all work, that we do have Scott Carney on the stream as well. So I'll be introducing him in just a second, but let me just add Swooping Hawk in right now. And yeah, Swooping Hawk, if you can hear, then yeah.
I can. Thank you for having me on the stream today.
That's okay, no worries. Welcome.
Thank you.
So yeah, we'll just, as long as everyone can hear okay, then let me just make sure this is the other thing, I had to restart my computer. So before I do an actual introduction here, let me just, there we go. I got things back open again, so I'm gradually getting everything that I did have prepared back ready to go once again. So Swooping Hawk's audio sounds better than mine. Yes, it will. I apologize. My audio is going to sound pretty awful, but hopefully everyone can live with that today. So yeah, without further ado, I guess, I just want to welcome Scott Carney onto the stream. So Scott Carney is the president and founder of harmonictrader.com. He has defined the harmonic patterns that comprise the harmonic trading approach. On the screen at the moment, you can see Scott's website, harmonictrader.com. He is recognized as a pioneer of technical analysis, creating numerous harmonic patterns, such as the bat, the garter, the 5-0, the shark, the crab, and others. So if anyone has, anybody that studied harmonics, I'm sure you will have come across Scott's work before. I myself have, I don't read many books, but I have read this a little bit in the past. And this is where I got a lot of my basic understanding from harmonics and everything there. So yeah, I'm sure a lot of you guys who are watching the stream today will be familiar with Scott's work. So I'm very happy and very excited to add Scott to the stream now. So welcome, Scott. Can you hear me okay?
Yep. Can you hear me? How am I coming through?
Yes, you're sounding good. You're probably sounding a lot better than I am. So welcome. How are you doing?
Okay, appreciate it. Thanks for having me.
Yeah, no problem.
Sorry about your troubles.
Yeah, it's always the way, isn't it? It's just a typical thing. Like I do these streams all the time, and I'm not the most technically advanced when it comes to streaming. It's just something that I did for a bit of fun, and now we're here where we are today. So I still have trouble with it sometimes, and it's always the case when I have guests on that's when things seem to go wrong. But yeah, hopefully everything will work a lot better now. Yeah, people are saying in the chat that the sound quality is not great, but we will. That's my end, I think, not yours. So yeah, Scott, if you'd like to, first of all, if you could give a bit of background on yourself, kind of a little bit of your background on how you got into trading in the first place and how you came up with the concept of harmonic patterns. I think that'd be great.
Well, that was I started just following markets as a kid, so I was always into it, and that for me really just wanting to know. This is probably early 80s when I started looking at newspapers and stock charts and stock news, long before all of the channels, but I followed it. And then got into it, read some books in high school, did an internship on the floor of the Philadelphia Stock Exchange. That was like 87. Then I went to college, but started actually doing a little trading in college, and then after college is when I kind of decided to really pursue it. And then in the course of studying everything from fundamentals to financial statement analysis, then to more of the charts, is a natural progression. I think it's a progression a lot of people find themselves naturally taking, is that you eventually make your way to the charts, and it's just a matter of time. And then once you start looking at charts and start looking for things that repeat over and over again, or some analytical ways to kind of explain what's potentially going to happen, then you're already into the technical world. And then the whole technical world I think is all about measuring anything you want to do. Any opportunity you want to take advantage of I think comes down to your ability to measure it, or measure what's going on. And that's a really key principle. I think a lot of people jump into the market without realizing how much they need to measure or pay attention to understanding, what are important levels, supply, demand, basic concepts like that, where you have to map out what you're doing in the markets. And so, all of that, I've been through a lot of different stages. The harmonic stuff was an evolution of a lot of things that I was studying and putting together. Um, the ratios have been used for decades. Elliott Wave was using it back in the 30s, and Prechter, Bob Prechter, and his Elliott Wave principle, which really blew up technical analysis and made Elliott Wave extremely popular.
Yeah.
He combined a lot of the 618 basic measurements to start to put together like ratio and structure. There were a lot of other people that did various things, various types of measurements with ratios, or 3-wave, 5-wave, M's, W's, stuff like that. But the combination of the two, and then what I really focused on were the M and W zigzag style formations that seemed to repeat. And there were people trying to do some work and identifying that strategy, that approach. Two guys well, really the one guy that came out with the whole M and W concept as a thing was Arthur Merrill, in his Merrill filtered waves. And that book from, I think it was 1970 or something like that, 72. He and a couple other people danced around trying to identify M's and W's, but they didn't put any ratios on it. And for me, when I kind of hit upon that subject, there were things that I saw that were consistent ways to measure each point in those structures, differentiate, create some basic rules for, if things are going to be, certain patterns have to establish certain movements or minimum movements to qualify as a structure, or as as any kind of a technical of technical significance. There has to be discrete uh, primary rules, primary measurements that have to exist. And that really, for where it took off of that differentiation of M and W patterns, um, kind of blew it out. That's really where it then just exploded to having this whole area of combinations, area of structural differentiation that actually worked. Something like, the two patterns most people know, bat pattern versus Gartley pattern. Those were huge differentiations that actually opened the door for a lot of other strategies and things to be put together. But it's been it's a fascinating, for me, it's just been a fascinating kind of area of technical analysis that I dove in and just never looked back.
Yeah, absolutely. And I certainly echo those comments, because harmonic trading has certainly taken me, just the level of power that it gives you is just incredible. And I find that it's a very accurate way to read the markets. And it's something I never expected. So, I've obviously traded harmonics for a while, and I stick with it because, they're very powerful patterns. And I was just wondering what the key components that you find make a harmonic pattern work.
There are definitely the patterns themselves are a structural starting point. Not difficult to know the differentiations. We've done a lot of work with the software harmonic pattern collection to automatically define and identify these patterns and these structures as unique entities. Okay, because they don't happen all the time everywhere. You're looking for the best opportunities, but you want to throw a couple extra confirmation factors. A lot of things that I do is with relative strength, that seemed to be working way back when, in the early 2000s, after I did the volume 1 book. There were things I was doing I wasn't really talking about with relative strength and volume and a couple other things, where it's like, okay, when something really unique happens and you get a pattern, like if you get an extreme test of relative strength up, above 70 or below 30, and you have a pattern. Those were things that were where I was looking at the things that were working. Yeah. And those kind of signals where you get other technical confirmation went a long way to helping the pattern and really pinpointing the pattern. The pattern, as I said, is a signal. It's a signpost. It's a starting point. A lot of people think, oh, it's just, the pattern will complete and then it'll turn on a dime and go in desired direction. But that's not that's not the norm. I think that's the well-chosen example. But when you see the patterns, once you understand, when you know what patterns you're looking for, and then you add a couple layers on it of like the indicator extreme or even individual price bar analysis, the whole thing's a process, and you will see it happening in slow motion almost, if you will, where if you're properly anticipating pattern completion, you have a real good understanding of the variables that need to come together. Those extra elements do go a long way. I mean, and I'm a big proponent of utilizing confirmation, as some kind of confirmation methodology. Other people use other strategies, MACD or Ichimoku or whatever. But I think undeniably, just looking at the pattern structures and alignments, that's a huge starting point, where if you're not looking at those levels, I think people that do quickly see, okay, hey, something's going on here. And then when they have the broader understanding of other things occurring, then it even gets easier. It gets clearer of where you are within what I call harmonic pattern framework.
Yeah, I've always found that with harmonics is, for me, and I think this probably goes for a lot of people when they start trading, is a lot of the time it's the Fibonacci levels and the Fibonacci numbers that people, at least for myself, I got drawn to quite quickly. And I guess it was probably fairly similar to you. And with the harmonics, it's almost the way that I see them. I'm not particularly, I don't know all of the theory behind harmonics. It's something that I actually need to brush up on. I kind of work a little bit more off of horizontals, volume and everything. That's the amazing thing about trading. But the harmonics for me have always been a way to understand the flow of the market, and to see, like, pattern recognition is everything. So if you can see the similarities between what's happening now and what's happened previously, be able to understand those patterns, and it almost pieces together the different Fibonacci levels that a lot of people will just start to learn when they first get into trading. Harmonics always seems like the next step towards, okay, you know Fibonacci, but then to actually trade that and to understand, to have a framework on which you can trade from, and to have a framework for where you can see the market going, or you know what to do when the market reaches a certain point. I think that's the really beneficial thing about harmonics, is being able to give you that extra information, that extra layer of information.
Yeah, I think there's a lot there, and it's not, I say to everybody that it takes time to kind of digest
Yeah.
the basic foundation of all the patterns, because it seems overwhelming, but it's not difficult once you get the concept of, hey, I'm utilizing a defined approach, a way to come to the market in a uniform, unbiased perspective, because the measurements apply to the all markets, all time frames in the same way. So in that regard, the identification uh, process, if you will, because I'm big on process, and I think a lot of mistakes are made. Traders make, I think 80% of all mistakes made in trading are in the identification process, where they're just not measuring properly, or they're not identifying, they're not taking advantage of properly what they identify. And I think a lot of the identification strategies or the process of trading, those mistakes are avoidable, because your plan, whatever your trading plan is, really essential to your success. And a guy that, a former friend of mine, Mark Douglas, most people know him for trading in the zone and Disciplined Trader. Some of the best psychology books ever written in the market. He talks about a plan and why a plan is so critical. He was actually pretty influential on a lot of my early ideas. He and I were friends during the time that I was writing the first book or two. This is late 90s, early 2000s.
Yeah.
And that whole concept of the plan as avoiding the avoidable mistakes really hit home with me. And so a lot of the patterns, a lot of the measurements had to have that upfront effectiveness. If that wasn't giving me an edge, then I was throwing it away. There are a lot of things and a lot of measurements people try to throw out there to, claim that has an edge, and it really doesn't. There's a lot of things that you could throw on a chart that do
Yeah.
nothing.
Yeah.
But every measurement, every point, everything that we look at within really this M and W measured approach is relevant. And then when you get that experience with how this stuff plays out, it doesn't take long. It's like one or two trips around, really, of, I think, a few weeks, or in 30 days or so, where you go from complete zero awareness to having a mastery of what to be expecting at each point. And
Yeah.
that's, again, that kind of understanding in advance, that expectations of knowing, having an idea what should be happening, guides executions, guides decisions, and helps traders. It gives them a clue when they didn't have a clue before. It's a general takeaway most people get.
Yeah, absolutely. And what you're saying about the thing with harmonics and with the levels that are there, it's something that's been proven to work over I mean, hundreds of years, since like you have the golden ratio and everything within Fibonacci, and these are levels that are, I mean, they're tradable, they're kind of tested, and like you were saying, there's a lot of people can kind of throw any kind of levels onto a chart, and you get that random line theory approach. But the thing with like harmonics is it gives you a set basis of rules to work from, that can, you have those kind of, I guess,
Yeah.
rules that are there, yeah, for sure.
Yeah, well, that's what appealed to me about harmonics, is it's a structured and measured approach to reading the markets. So it gives you the framework and know when you can look for entry and exit points. And that's what's really changed, trading for me.
Yeah. I was going to say as well, for you guys, because because we had these issues at the beginning. if either of you would like to share a screen, I know we were talking about this earlier, we just didn't have time to test it before. So if you go down on the bottom, you should be able to, there should be the option there to share your screen, and I can just pull that up.
All right,
and then if there's anything that we want to go over.
Yeah, let me see if it's, I'm running a couple screens here, so
testing on the go.
Yeah, let's see which one pulls up here.
Yeah.
I can share a screen here. Let's see. Without showing you guys what I had for dinner last night. Yeah, let's do. Hold on. All right, that'll be good. That'll work on this one.
Okay.
Let's flip this back out. All right, yeah, this is actually going to help. I think that's good. That, yeah.
I'm seeing in the comments people saying that they're underwater, so I assume that Bitcoin is still dumping as we're doing this. A little bit.
Let's see. Let me know if this comes up for you guys.
Yes.
All right, sweet.
Yeah.
There you go.
Cool.
Actually, that was Bitcoin.
So, yeah, sorry.
Oh, no, I'm good. What do you guys want to look at? You want to look at stocks? You want to look at crypto?
Yep, maybe we can start off with Bitcoin, since that's the one that everyone seems to like. And maybe we can go through sort of the big picture perspective and then sort of drill down on the local action that's happened over the last day or so.
Okay, sure. Well, big picture, things that we've been looking at, the harmonic stuff, harmonic patterns, immediate stuff that we have been really negotiating since June, has just been this big, deep crab pattern that has done nothing. I mean, really amazingly, done from 17 to 25, stuck in that range for 3-4 months sideways. I think by now we can call this what I like to say a harmonic dud, but it's a deep crab pattern, just an extension pattern where your key number is this extension. It's a 1618. It's one of the primary ratios. And, I won't get into how we derive any of the numbers, anything like that. Actually, all of that you can look up in my books and on the website. It's tons of resource material. But why the 1618? It's one of the primary sacred geometric ratios. Beyond that, just that this is the primary number we use with this pattern. Clearly, Bitcoin has been stabilizing since its decline exactly at that 1618. And just for new people, just to kind of really go over the simple way to connect the dots. If that's the starting point for the M formation, we're looking for an X to A to B leg. And this is the key about all the M and W formations. Your B leg, right, depending on where that ratio alignment sits relative to this X to A, what I call primary leg, that's going to dictate a great deal of what your possibilities are. And in the way that this set up, where you got an 886 as your B point, you come back up and then you start to roll over and then break down. Even though, listen, you broke down at that B point at the 886 all the way back in January. Okay, and despite that, you're still looking for, because of the alignment, a 1618 extension to the downside. And that was been one of the issues I had with Bitcoin all year, especially in March and April. It just really got ugly to where once we did complete this breakdown, we went to the 1618. Back in June, that was a really huge time that I was looking for the completion, stabilization of this pattern, where it defined the level, basically, 20,000, 21,387 is the exact number, depending on your data feed. But what we do and how we look at that is the completion of the pattern. That's step number one. Step number two is usually some kind of indicator confirmation denoted by the arrow. That's really where, for me, the process started on any kind of long possibility. And this is still what we call type 1 reaction, where any move, anything that this does off of this zone, still just expecting a reaction. I'm not looking for a moonshot. I wouldn't say that this is going anywhere huge anytime soon. In fact, the basic process for the way we treat all harmonic patterns is we look for that first reaction up. That's the type 1 reaction, hits the target, and then usually to come back down for the type 2. And seems like there's a lot of work for that to even happen. But
yeah,
for now we're still in that phase. That's how we would identify where is this? Where's Bitcoin relative to that pattern? What can we expect? And typically, we like to see that whole reaction phase in 30 bars. This didn't even budge. I mean, it barely came off of that zone. Okay, within the first 30 days, he went nowhere. You're now day, 90 almost. And those are just ways that we look at standard numbers. We look at the metrics and say, okay, what's going on at those levels? Ethereum has been a much better chart, obviously, than Bitcoin, but a lot of the same dynamics. Actually, I'll shoot over there because Ethereum had a pattern, much like Bitcoin had a pattern down at this low here. Let me just give us a second. There's the same crab pattern, but this one generated a response, a reaction. There's your 1618 level. That was around 1281. Confirmation and something that Swooping Hawk knows. We were all over this at 1040.
Yeah.
Looking for that check back. There's no other way. There's really not much else going on in that area that would have suggested much, but it was a key area for us. The most important level, or the most important structural fact, was that it was a 1618 extension of the last move up. And those kind of clear measured moves, especially when you take on an M formation, that's a crab pattern, really nice metrics set up where, okay, I'm going to start looking at that area. And this is something, again, I try to bring a level of realism back into the structures, because other people might say, oh, well, that's the spot. Just, lay it in right there at the 1618 and it's just going to explode. No, again, this shows us more of what is the normal process of the completion of a harmonic pattern, where you complete the pattern first, then you go through some stabilization, you form your confirmation after the fact, and then you start to build out of the zone. Should happen a little more quickly on the first time than say the retest, but that shows a lot of the ideal behavior you want to see. And I'm still I've been targeting actually 2485. I know it sounds crazy, but still am 2485 for this type 1 completion. And because it's a reaction, it's a part of the harmonic pattern framework, the way that we handle all of these. But I'm, my thought process is that we go to a type 1 target 1 realization at 2485, then we come back for some kind of retest later on, early next year, something like that. But that would fit within the 1-2 scenario. Now, I will say, with yesterday and then last week as well, you had a couple scary days, but we have confirmation. And this is, again, where strategies that involve confirmation really do help to understand if something's just a blip, or it's an inconsequential move, or it has really something behind it. And we do at the moment, we still do. I mean, we still do as long as basically this 1480 area on Ethereum holds. But what I use are a couple of modified indicators that are proprietary off of based on relative strength, but with a whole lot of adaptation and other strategies built in. I've got this amplified RSI. That's our hyperactive, hypersensitive relative strength reading. And then the bottom one is harmonic strength index, which is, that's our principal signal that we go off of. And those are the arrows that pop up you see in the zone. And we use those as triggers.
Yeah, I was going to ask what the arrows were based off, because I was trying to figure it out when you had the Bitcoin chart up, and it seems that it's a bit different on the Ethereum one. But I was thinking, is it kind of an engulfing candle, or what is it that's triggering those? But that's very interesting to see. Yeah, so you can see it's basically each time you go to those lower and upper bands, then that's when the arrows get triggered on there.
Yeah, it goes to the whole indicator extreme. Trying to find relative strength was great when it worked, but I wasn't getting enough signals. Relative strength is kind of a slow snail type indicator. Doesn't always hit the extremes. And then there was also things that I looked at in the indicator extremes where M and W formations, they on the indicator chart, this could be considered a W formation coming out of the indicator, and that's a different signal than, say, just a little V shape or a little impulsive shape. And so there was things like that I wanted to uncover, which we did with the amplified RSI. But the extreme, or the ability to find an indicator that can go from one extreme to the next, was where harmonic strength index came in, and that helped to really clarify where, after the completion of the pattern, is the ideal spot for the opportunity. And again, with the pattern completing, that's always the beginning of the process. But the indicator itself, that's the trigger. That's like the light switch going on for the trade opportunity. And even that, in your best of instances, is still going to give you plenty of time, because the pattern will complete, the trigger will go on with HSI, and then you're looking and in this zone where it triggers, usually with a fair amount of time to respond to it. But you still have to manage. And this is the thing with, I think, harmonic patterns. A lot of people are able to learn the identification, learn the measurements. Hey, it's at a 1618. All right, I'm going to take a trade at a 1618. But the reaction reversal dynamics, it's critical, because even with this setup in Ethereum, okay, it's has to be managed aggressively. You fail your primary uptrend, stuff like that, it's over. This is not something that we can say, oh, we're going to let this come all the way back down again. And so we're right there at a real important test that I've been saying recently in the last week or so. Let's keep moving stops up, keep moving up for the whole scenario. Otherwise, we'll know real quickly if we do break down. And I think Ethereum's the one to watch. You're under 1480, got under 1460. Not only does the trend line break, but this whole attempt to do a type 1 reaction fails. And what typically then is required is, a longer period of time to consolidate back in the zone. And that's also something where, as a trader, you have to realize, hey, just because you got a lot of great levels here, a lot of great signals, you can't get lax on your management, and you have to be willing to be responsive to what happens. So utilize the levels as kind of a guide, as a framework, as I keep saying, but don't be afraid to keep trading it. I think that's something that is I've seen on both sides. I've seen it on where people are not will or sit on their hands when it comes time for us, take a stop loss, or close out the trade, even if it's like a sideways action. Like Bitcoin's exactly that kind of harmonic dud sideways action creature at the moment. Or you realize you're in a type 1 reaction, and we still are on Ethereum, and say we get to a target and we don't take any action. Oh, it's going to work out great. I'm going to stick with it. Yet it rolls back over. And this is, that's another part of understanding that how do these patterns unfold? It's typically in this 1-2 process. And let me just show you something. Stick with the big indices and stuff, but Dow Diamonds are doing this exact thing from June. Here's big butterfly, a couple patterns, but a little deep crab, a big butterfly. That's all the software's kicking out. But again, here we are with, what was that move from June? Just a big reaction off of these patterns. And now we're coming back into the type 2 return move. So yeah, markets look scary, but they're getting thrown down back into the big patterns that really developed back in June, end of June, your July to August run. That's all reaction. That's all that was. And if you're looking for a bigger opportunity, you're looking for these patterns to come back, get re-hit, retested, give you something down here. There's not a lot right now, but give you something maybe a bit lower. You're trading what, 310 at the moment, somewhere around 302, maybe as low as 288 for one more big flush down.
Yeah, I think that's quite consistent across all markets at the moment, isn't it? Things are coming back down quite heavily, but everything at the moment is testing that support that we had previously. There is the opportunity there, and it's similar with the DXY on the inverse, with the straight for the dollar and everything. That there is that opportunity there for things to be making that higher low off of the kind of, from a macro perspective, and being able to just hold where we are at the moment. I see a couple of comments, for one from Evan just saying, yeah, for the sake of humanity, June lows, please hold. And I think that's like across a lot of the markets at the moment, it's looking at that. The retest is okay, but to be going below where we were back in June is starting to look a little bit dangerous across the markets at the moment.
Here's another one, just to show you guys, same kind of deal going on, even though it's up today. Notwithstanding everything going on, okay, the standard way that I look at all harmonic patterns, and there are a lot of patterns that completed your major stocks daily, weekly, that are doing stuff like Tesla did, where it was a very strong straight up move from that low. But no matter what instrument it is, the fact that we have a pattern, okay, and the way that we look at that normal dance that it does, the best way to describe it, where it does the reaction, it wants the retest. I think a lot of that comes from standard technical principles of, establishing a pivot, retesting to confirm the support or the resistance. That might have something to do with it, but the patterns from pattern perspective, every pattern that we look at, we look to go through this reaction from completion, confirmation to target one, come back, and then this on the retest is where your larger opportunity sits. And again, not there yet. Tesla's up 9 today. It was up big, I think, 2 days ago. But even in the face of all of this, it's those kind of pattern dynamics that tells me, okay, where's the market currently? And we're in this process of that return to come back and, do the work that's necessary back down at those lows from June. And it's like, if there weren't patterns there, I wouldn't say, all right, we need a retest. Everyone can say, yeah, we need to retest June lows, or some people are not, but it's more about, where's the pattern? Is it the first time or second time it's completed? And then, what kind of assessments can we make from its relative position? It's where's the other one? No, it was SPY. I'm going to show you guys. They're all repeating that not only the same kind of patterns, if you will, and same kind of process, but they're doing the larger one too. And this is S&P 500, the SPY. This was a shark pattern down at 371, did a almost perfect reaction to target one, and now just coming back down. And this is, if you want to know if there's going to be a real bear market, it's under the June lows. I mean, if it
Yeah,
happens, it would have to be, it's going to be a massive move if it is. If that fails, and we'll know really soon. I think we'll know within the next 4 weeks, 6 weeks.
yeah,
But
yeah, I agree.
this is, there's nothing else underneath these lows other than as what we would look for as a complete 886 retracement. And again, just tracing out what's the next pattern, what's the next M shape that I could look for underneath those lows. It's only
COVID
this.
lows. Yeah,
It's like there's your X to A level, this is your B, and then C is a full 886.
yeah,
Because that B point, that's a 50%. And if we fail this B point, I guess that's under like 364. Yeah, then you shoot that whole gap. And those are the only two possibilities here. There's the only two options within the whole scenario for the market. If I'm drawing harmonic patterns,
yeah,
it's either we're going to retest those patterns, which there are, they're in at the B point and hold, or fall apart, have a couple more days like we did yesterday, and just slice through that B point.
yeah. I'm happy you're saying that, because this is something that we've been saying for such a long time, and something that on so many occasions on the streams, it almost comes across like you're being like super extreme about things. But the way that the markets are at the moment, I think it is a balance between two extremes. We're either just testing back into that support, like you say, at the moment, and we're going to be able to make that higher low, be able to form a pattern off of kind of this secondary test that we're getting now, and then things will start to, we should be able to rally off of that, and we're looking at a bit more relief and a bit more stabilization in the markets. But I mean, if those June lows get taken, there really isn't much below. Like we've come and we've tested the support, and this is across everything. And yeah, the alternative is carnage. I mean, it would be good fun if it happens for as a trading perspective, but yeah, it's you're looking at a pretty big collapse if things don't hold at the moment.
Yeah, here's Apple.
Yeah.
Apple doing the same thing, with Apple having retested another pattern. It's got a couple patterns, but big pattern at 175. And I think this is, look, it's understandable. Everyone's kind of concerned, especially after yesterday. But if it's going to completely fall apart, I think it's where you start to take out your major levels. For Apple, that's back down under 135. Is really where is the support. I mean, Apple is just squeezed between 175, where you had that big bearish pattern, and you had a 1, and then came back for the secondary retest 2. All right, so you are at basically 2 of 2, and you're looking for Apple. If it's really going to do something, it's going to do it now, and you come back down to target 2 at 135, 134. If you really want to get concerned if it fails that level, because it's going to be a much bigger thing, a much bigger downside. I'm not there. I'm not really there in terms of, I want to see the retest of the patterns that happened basically in June. Let me just show. And again, looking at the biggest of stocks definitely clarifies it, because they're all showing patterns. I mean, here's Microsoft again. This is on the other platform for harmonic pattern collection, but same. We use the same algorithms for all the platforms. We've got it. This is eSignal, and TradingView was the other one we were watching. But look, the takeaways are that we have significant patterns that marked the low in June. That's acknowledgement number one. And number two, they did ideal reactions. So that phase, that part of the job is over, and you're in the return phase where, okay, as I've been saying all along, you got to retest these patterns. If you were super bullish on Microsoft, you're looking down here to confirm it for the major confirmation of the lows. Otherwise, you slip on through. All right, that's where you have the larger problems. But until we get down there for where we are now, you got to drop another $10+ at Microsoft before that happens. And your confirmation, here's some of the, oh good, here's RSI. There's relative strength on the bottom. That shows you actually in comparison to the other ones. Here's standard RSI. Hasn't really hit. We haven't had a concrete oversold since really the beginning of the year 2020, in January 2022, and that didn't really lead to much of a rally. Any kind of oversold readings, you're rolling over across the board, all three of these. So this thing is, really starting to just spill out. But if all three could come down aggressively and register at the same time under, say, 240 or in that 230 level, then and pivot out of there, maybe that happens by the end of the month. That's a textbook scenario where the type 2 reversal could take shape, but you're still lower until that happens. And that's, again,
so on this one, the low on that chart, so you'd be looking, so would this be like a kind of divergence that you're looking for on the RSI, where you're making the lower low there, or is the low, I can't quite see where the low in June was off of this, but you're
the low in June was here. You didn't really register. You did on this top indicator. That's amplified. That registered. HSI registered. That's a good example where, hey, those two are showing a signal where RSI got close, but not enough to register. But again, first time of a pattern completion. So we still think reaction and target 1, even though this went to target 2, we're really just thinking it goes to target 1. That's the minimum we're shooting for as the expected reaction. Really anticipating that once that hits, the 1-2 mechanism come back down and fully retest the zone, which came close but did not hit. And now I'm looking for that to hit, at least hit the 1618. Again, there's that number, that 1618 number. But that's where then we say, okay, pattern has been retested. Start looking after that hits. And so where we are and currently within kind of the initial test and then the return is we're still on our way back down to retest that zone. So ride that, look for it lower and look for something down here. I would say it's probably another week or 2 weeks away from getting into where it needs to get to. But also we'll know. I mean, you'll know if this thing starts doing crazy things and gaps down or goes right through this lower hop level. Hop stands for harmonic optimal price. That's kind of your maximum overspill. But look, if we see crazy things here and Microsoft is trading below 220, then we really got problems. And I mean, like, big problems where you can go back to your weekly or monthly charts and just say, okay, what's this going to do? There's nothing but air, obviously, underneath these prior lows. What are the possibilities if this fails and this thing really takes it out? Well, then you are looking at that second leg, that next leg of and I've said this before, that it's an either or scenario. There's no middle ground here. So I mean, you go to that 886, or maybe that's a little too low, but essentially, the whole COVID thing, from the COVID low, you're going to have to, you fail here, you're going to have to make an attempt to go back and retest the 886 off the COVID low. But I'm not there yet. I mean, that's if those patterns fail, and we got to take it in, take it one event at a time.
I think that's it. Yeah, you take it level by level, and if we get there, then we'll be prepared, and we know that that's a situation that can happen. It's certainly going to be a target if we are going to break down. People are going to be going for those COVID lows for sure. I wanted to ask quickly, and I know Sweeping Hawk's got a couple more questions as well before we wrap things up, but there was a couple. We did also apologies, I see on the comments again saying that I sound like I'm in a bathroom. Yes, my microphone isn't working, so anyone that is late to the stream, I'm having to use a backup microphone at the moment. But if it's okay, I'm just going to add, so this is a couple of things. So you had the Apple chart up earlier on, and it's interesting that I think you had a crab or something that was coming from lower, wasn't it? And for myself, I was trading off of, and I'm going to ask for your critique on this as well, because I'm not using the software, and I'm just I use Harmonics as a bit of a framework and a bit of a guide for a plan. But basically the short trade off of the Apple, as we came into that 886 from the highs here, and also a gap fill off of this, and was able to take the short, and we're coming into that 5.0. So this is something that I'm looking for, and I'm pretty sure that although it's different harmonics there, that it's like similar targets. And again, that's the amazing thing about when you're looking at these ratios, how they just seem to match up, kind of almost there are different ways to get to that point, but eventually you do get there. So we've been trading this on Apple.
Nice.
Recently.
Yeah, it's a little bit different. The shark pattern, that was from my volume 2 book. That's a little bit outside the M&W framework. The shark and the 5.0 are related, and the 50% level is your first objective on that. I mean, I don't know how you're trading that, but typically if we hit that objective and you don't move through that convincingly, you're probably taking a third or half off, blindly taking it off there, no matter what. Hint, hint.
Yeah, we got so close. It was already let's take some profit on this. Let's not get greedy.
I have target one at 152.59, and the low was 152.68. So 152.60. And just to share this with you and anyone else, that I do have some signals here that say that type 1 reaction off of that shark is almost over. Okay. And if you're still in that trade, you're not going to need more than 2 or 3 more days to say, all right, that's clearly stabilizing. Yeah, there's the chart. This is the chart for the daily on that one for this platform. There were a few different things going on, that prior pattern. Let me clean up the chart, but this prior pattern from last year that had this crab leading, it was basically a 1618 2.0 advance from the 21 correction. There's the 1618 was at roughly for Apple around 165, but for the crab pattern, and again, some of the individual characteristics of these structures that I've shared with everybody is the fact that, when you have a crab pattern, you're not surprised to see it overshoot to like a 2.0. That's where we use the hop level, and that's how we really deciphered 175 as huge resistance for Apple. But you see how this thing has bounced off of that a few times, and you had this big quick reaction the first time that was good for 25 points and came right back. And I will say this even more so because you have a shark 5.0 going on here. Wouldn't be surprised to see this thing, once it's done its full dance at 152.60, that you could have a quick snapback, maybe come back, not hit the top range, but you're basically there, completed the type 1 reaction, that you could have one more retest and then roll back down where you go to target 2. Again, of course, you're in that trade. You want it to happen that way, but it's not how most of the patterns really work out. They're usually going to express that reaction, which I think that's what that is. There was a lot of things up there. 886 retest and the other retest of that pattern, where, all right, even in a reactive move, let's say Apple's still going to be one of the strongest stocks in the market, no matter what, you're still going to hit resistance. And this thing is pretty clear, real toppy work up here at since last year's peak. I mean, you continue to ride that down, and we could come back, maybe hit that downtrend one more time, and then start to really fall off. But the pattern itself, I think nailed that quite well. And you see this price action hugging not only the zones but the target lines as well, where again, I would say, 140 something, 145 is support for now, 175 resistance, and then you'll have real trouble under 145.
Nice, yeah. There's I'm just going to throw back on, so just as we're going, a couple more of these that I'd just like to ask your opinion on. So this is quite interesting. I've only just noticed this. I was just flicking through for things that I have harmonics on the chart. You're probably going to tell me off now because this isn't completed. But this is something that I was looking at as an idea. And we were drawing this on natural gas futures earlier, and price was down here. And we were looking, there were a couple of ideas, basically just to look at, okay, where could we look at potential trades from if this is going to happen, like not really looking at a trade at this point, but if we can get continuation for a couple of trades. So I've got on this an ABCD, and again, we're looking at another ish kind of shark off of this, where, and I mean, it's just quite interesting how we've come into that, the 618 on the way down. And for myself, looking for that leg lower down off of this, I'm not sure if you've got anything on natural gas that could be of interest that's giving this, again, as a kind of an impulsive move up that we're getting with a further retrace back down. Again, this isn't completed. This was playing around with the charts earlier when we were doing some stuff on harmonics and saying how, for myself, like using it as a bit of a blueprint on where we can look for trades in the future as well.
Well, there's definitely been a lot going. There's that gas chart. It's been one of our featured markets that we really got in front of. I mean, probably more like 18 months ago, we were really talking about nat gas. There was patterns right down at the low. For a while, most of the year, I've been saying 9 is your top end resistance, $6 support. And a lot of it has to do with the patterns. We had this crab pattern that initially completed way back in April, and it did this real sharp reaction back to target 1, and this pattern has essentially defined why this is so choppy, because you went down for a reaction, then you came back up, and then you did an amazing bang at $9. You banged against this, hitting the ceiling a few times before you actually did get down to target 2. And this latest retest back to around 9 and 950 or so, for me, the confirmation, that's this yet a third retest. And that's something where I start to get a little a little skeptical on, okay, how long is this pattern going to last? If we're going to hit against the resist 3 or 4 times, well, this is it. And I've been favoring this to come down. I didn't know it was up 80 cents today. I don't know how I missed that, but
it just popped earlier. I was very surprised.
But you're against this zone at 916, which is everything. And I don't. The only thing that I see here on your daily chart is actually you did have a bullish signal just a couple days ago in this bearish zone. And usually that when you see something like that, that takes more time, or it's going to give you more time to hit the upper end of the whatever the range is. But look, if nat gas and crude oil are going to do anything, they should be busting out now. I mean, natural gas should be well above $10, and there's really nothing above $10 once it gets there. You were showing a 4-hour chart, and
there's a 4-hour shark on nat gas. Oh, I'm not sure if it's on NG1, but it's on the Oanda chart.
Okay. Let me see here. I don't know if I have that, Wanda.
I think you have to type in natural gas. It's one that's a little bit hard to find.
Yeah.
That doesn't look like it's coming
No,
up.
someone else was showing me something on the
Is that the one that's just nat gas, the ticker, or?
Yeah, it
Those are
is.
mostly
I've got-
NYMEX.
Yeah, I've got nat gas as a ticker. I'm not sure if that's. So if you take away the natural and just nat.
Nat gas USD. No, it's not coming up.
Yeah.
No.
Oh, I can share my screen if you.
Sure, that would be great.
Whilst Swooping Hawk's setting that up, I'll say welcome everyone who probably hasn't seen a stream of ours before. I see there's a lot of new faces in the stream tonight, so welcome everybody. Apologies for myself sounding like I am underwater. My microphone has stopped working, which is very annoying. But yeah, if you can like the video and subscribe, we'll do that kind of thing as we're having a little break. And here's Swooping Hawk's chart.
There you go.
Yep.
That was well timed.
Oh,
Yes.
I see that. Okay, I'll have to look that up.
Yeah,
oh,
so
it's a
this
CFD.
one,
I see that.
yeah, it is, and I trade on Oanda, which is why I look at the chart. And yeah, the pattern's been really great. This one has been very clean and reactive, that like you would expect from a shark. And yeah, the RSI gave us, what's called a complex structure, where you get multiple inflections in the extreme. And yeah, it just sort of blasted out of there and went. So that's the one that I've been looking at for the current move.
Yeah, that one will. That's a reaction. I mean, that's above
Yeah.
the 50, but it's probably at the 618 level, almost at your structural limit there for this move.
Yes.
We'll see what happens. I mean, again, I would still. There's a beautiful move and it's up huge, but I would still say, hey, the bigger opportunity would probably, have to come back to $8 or 780 to retest that zone, and then go off of there. But impressive for where it is. I mean, I really thought nat gas would start to roll back down to 7 or 650 on all of this. I don't know. I have to keep my eye on it now, because above $10 there's nothing. I mean, above $10 there's the pattern at 15.
Yeah, well, I must say you got me onto natural gas, and I've enjoyed trading it, so I kind of stick with it.
Oh, nice.
And yeah, so I was looking when it was $9 for it to come back. But yeah, I was looking at a bigger move, a bigger retracement than what we got. However, yeah, this 4-hour shark has been really nice. So I'll look to see what happens when it comes back down. But we are very high in the RSI now, and still pointing upwards in the extreme. So, I mean, we'll see what happens and how that sort of turns down.
I'm hoping it does turn down.
Yeah.
I just had the alerts that went off earlier on, but I am very, very tempted to short, because I guess we've got quite a nice invalidation where if it that's the thing, if it is above 10, if it gets back above $10, then yeah, like Scott, you were saying, it's how many more times can you hit into that $9.50, $10 region before it breaks? And for short positions here, I think
it's been remarkably choppy. I mean, a lot of what the natural gas moves have been, 3 to 5, maybe 7-day moves. That's it, and then they have some kind of sharp correction. So again, I wouldn't. This definitely looks like it's building, and it's trying to get ready to get on a launch pad to get above. On your daily or weekly chart, you're looking like it does want to make a run to $10, but I wouldn't be surprised if this thing bangs between $9.50 and $8 a few more times. I mean, it's done it a lot just in the last 2 months. So Keep an eye on it. I'm again, I think we've been we had some patterns earlier in the year on this and a couple other vehicles which were really nice. I mean, just worked out sweet. And where we are currently with nat gas and crude oil is kind of a wait and see. It's a little late to try to get long and a little early for a short. If you're going to take a short, you got to wait for that 4 hour to roll over out of those zones at a minimum. That's probably not until tomorrow.
Yeah, that's true. I mean, because if you look how deep that RSI's gone, that's a sign that it may take a little bit of time to come out of that. And, you know, also has potential for a complex structure to form. And if we look at HSI, it's still got a bit of upwards movement left that could potentially happen as well. And the volume's been quite big as well. So, yeah, probably see what happens over the next couple of days.
Yeah, I guess we've just closed, haven't we? Markets for today, at least New York session. So
Yeah,
confirmation for anything would be more likely into the morning. I know with gas and you'll get derivatives that trade 24 like or longer, but yeah, certainly looking for a little bit more confirmation. But yeah, I'm tempted.
Yeah.
For sure right now. I haven't traded gas before.
Yeah, natural gas is really good if you get in at the levels because it's a quick mover. You get your money and get out again, and it's really good. But yeah, you just have to be careful and choosy when you get in. That's all.
Yeah. Yeah, for myself, it's hitting the right kind of things. Scott, I wanted to ask on so from a trading perspective so I guess it's the software that's basically providing the setups. Is that the same across all time frames? Have you got favorite time frames that you use? Is it more like, do you do kind of stuff from a day trading perspective, or mainly looking at that 4 hour daily chart for those longer term trades? And is there any difference between the reactions? So when a harmonic pattern completes, is that depending on whether it's a short-term trade or long-term trade, are you looking at similar things on different time frames?
No, I mean the parameters are the same.
Yeah.
Proportionally, it's the same. Depending on the size of the pattern, yeah, that could vary slightly. It can vary between time intervals, but you know, I think it's for futures, Nasdaq, S&P futures, E-mini type trading, the real short term, the 1 minute, the 233 tick, and 5 minute time frames are really helpful. But you're in and out. You know, you're in and out within the hour, in and out within 30 minutes or whatever. Whereas the stock stuff, the things like I showed on Tesla or Microsoft, those are definitely those are more favorable, I think, because you have more time to react. They move a little bit slower because they're on a daily time frame, and they're going to exhibit clear signals. I mean, it's usually like if you have a bullish setup in Microsoft and the market's doing okay, then you know it's those are some things to kind of think about where you're not really going against a trend. But you're still looking for your minimum targets. You're still looking for your opportunities in the prescribed levels, and then and treat them all as a minimum. You know, usually, yeah, you get a good run. You can get get a move that goes past the target one, but those come pretty quickly. You know, you're in a trade and it develops rapidly. The other thing that I think is fairly advantageous with failures, and a lot of failures where you don't get much of a reaction off of the pattern, is that it'll go sideways.
Yeah.
And it'll do the dud thing that I was mentioning, where it's just not much of a response, but it'll go sideways and do nothing for 15 or 20 bars and say, all right, if it's not responding, then you know I'll scratch it out. And I mean, Bitcoin's probably the real case study here, where we've done nothing, and you know, now is this a scratch? That's really what I need to think about. Is this a scratch because We've gone sideways for 70 bars here, 70 days. Oh wait, no, it's
90.
87. Yeah, something like that.
Just I mean, if the harmonic pulls on a 3-day, you're okay.
If it's on a 3-day, but then again, and a lot of people say,
yeah.
well, you can adjust. Hey, you can adjust your time frame. You could go to a 3-day, but then your decisions are still, you know, you're still having to make bar over bar decisions, and that's why I think looking at like number of bars helps the decision making process, because you're not thinking in time. Like if it's a 1-minute chart, then I better have you know the next 30 bars. Yes, it's the next 30 minutes, but it's the bars that I'm really considering, because I want to see a response. I want to see, you know, I need to see some kind of individual price action that says, hey, I'm responding to the levels. I'm responding to a 1618 extension.
Yeah, I think this is it's very typical of Bitcoin. Is it will just it's one of those assets that trades so much based off of emotion as well, and it just seems to do this. It will just have these periods, and I remember before we came into the last major bull run, it had a 90-day range after the COVID lows. You can see it there just before it goes crazy, kind of butting right up at that 10k resistance. It put in a 90-day range back then, and it just seems to be a consistent thing. Like 90 days is, go back to June last year, I think we were looking at, it was like 93 days before it broke out. And I think it's a very similar thing. I guess we've had a downtrend for the best part of a year now. So to go through a quarter, essentially, or 3 months, 90 days of sideways, before getting, again, any kind of impulsive move back out of it, or any trend that starts to form out of this is very much a similar thing. So yeah, looking at 98 days there, you go back to like June 2021, it's about the same. The highs back in April, May, similar. So it's a consistent 91 days. It's it's a very Bitcoin thing. A 90-day range is it loves it.
Yeah, also something about the 21st, like right around the seasonal equinoxes. I you know, and I don't like to try to look at any of those type of cycles, just other than awareness. But you've had, you know, the June 21 low. That was something that I talked about, where kind of along the lines of what you're saying. Yeah, really curious how that happens, making highs and lows around the 21st. I think, you know, with what we have in Bitcoin going back to 2018, 2020, you had two massive bat patterns. And so fact is, you had a pattern, but the first one, you went sideways, even worse than it did here, for 6 months, something like that, 5 months before you got anything. So if we're in this a real dead phase for Bitcoin, that's okay, but it has to remain dead and go sideways. It can't keep going lower. You really can't go below. I think last week's low at around 18,000, you got to hold. Of course, everyone's going to say you got to hold that low, that prior low. You know, as you know, the real, that has to be it. We're still trying to surf that downtrend. At least you're trying to crack it. But you know, there are a lot of things going on. I think it's more on the daily. You know, with that, at least from the things that I'm looking at, you have these patterns here that this is an extended consolidation. I'm definitely antsy. I don't like to see this in such a sweet zone. This should be a no-brainer. This should be on its way to give us a type 1. It's not doing that. All right. So I'm bumping my stops on my whole scenario. And you know, the only other scenario that I've talked about all year is, again, going back to your long-term charts, is, well, if this doesn't hold, if that does fail, if I'm just connecting dots, you know, for Bitcoin, the big pattern that I have just to connect here is something that looks something like that, where you get your B point roughly at a 50 plus, and then big 886, which repeats for the third time, a bat pattern That's around 11. That was exactly what we had in 18 and then 20 and then another one. I mean, that's the only thing underneath that 18, 17. That's it.
Yeah.
And I don't know. I think we'll know soon. We'll know in a month.
Yeah, I think I agree. I think we will know soon. Yeah, the thing with Bitcoin again is it's because it is one of those assets that trades so much more of emotion. There's been so many occasions over the past few months where there's been good opportunities to punish traders that are expecting this to bounce from the levels that we're at now. And I think this has been something that we've been looking at quite consistently, is when it's a market that just moves very interesting. It's so sentiment driven, and I find that it always takes longer for things to play out, because you just need to there's a lot of dumb money in it, and get that money out before we get those reactions. Once they're all fed up and exited the market, and you've kind of shaked out the leverage and everything that exists within the Bitcoin ecosystem, it's just that's when we hopefully will start to see those moves out of it. I just wondered, I won't keep you too much longer, Scott. I'm aware that we've been going here for almost an hour and a half, and I don't want to take up too much of your time.
I probably have 5 more minutes before I'm in trouble.
Yeah. So I wonder if Swooping Hawk, was there anything else you wanted to ask quickly before we wrap up, and then maybe we could just, if you're okay with that, just put it to the comments, and I can just maybe pull up a couple of questions just before we wrap up here.
Go ahead.
Okay, yeah. So my last question is about the interaction between sort of higher timeframes and lower timeframes. So do you look for patterns on lower timeframes to indicate the movement on the higher timeframes?
Sure. Yeah, definitely. That's the smaller pattern inside the bigger pattern. You want to be looking for that. We have a couple of those scenarios right now that especially if you're in the zone, like if you're in an area where pattern's completing. Let me see if I can find something that fits that.
I'd love to see something on like 15-minute rolling over onto.
Yeah. Oh, you know what it was? Okay, so we've been assessing this Ethereum situation. All right, and we had some daily, weekly things right up here around 2000. Really nothing there on that chart that suggests it. There you go. There was a smaller pattern. Here you go. They had a bad pattern. One of the things that I pointed out a couple days ago that I'm looking, and still am. I'm still looking for this full return to retest the pattern that capped it at 2000. But what we had on the 4-hour versus the daily is you did have this thing that this explains why Ethereum did what it did. It and a perfect example where, okay, the 4-hour pattern, I need to pay attention, comparing it to the daily, where you ran into the retest of, you had this Gartley from last week. It went down, then came back up, and then hit the retest. So that's what's going on. And a good example where the 4-hour time frame, you need to look at that to figure out what's really happening. Again, if there's another level to bump your stops, if we really take out target 2 from this move, then I'm super concerned. That's one way to kind of compare, something that's clear versus not so clear. We're really vacillating between a couple of different patterns here. Where is it going to go? A look at the 4-hour time frame. That's a great way to look at that. Or the other one was Apple. That was the other one where you had one or two things up there on the daily. I think you had that shark. Yeah, you had a shark up there.
Yeah.
And then I think it was like a week or so ago. There you go. Go back. Or maybe it was an hourly chart. Oh yeah, no. On the same thing on the 4-hour. Yeah, the 4-hour chart was showing that in the same regard. Looking for things that agree. Yeah, and you've got the intraday action kind of forming a similar bearish structure like the daily or weekly shows. That definitely helps. Or even something that's like a smaller pattern, and the daily zone. you know, Apple's got a lot of numbers at 175, and then it flashes a intraday pattern at 172. That really helps you to pinpoint where to be looking at that for that turnaround point, and it does work like that. Yeah, absolutely.
Yeah, that's great. Thank you.
You got it.
Yeah, thank you. Okay, I think, yeah, if it's okay with you, I'll just ask in the chat if there's any questions, and we can just pick up maybe one or two just to pop up before we wrap up, because I'm aware we've been going on for quite a long time, and I don't want to keep you for too long.
No worries. Let me tell everybody, go to harmonictrader.com. For those that don't know, all the information for harmonic patterns I give away for free as a basic membership. That includes all the books. You just hit the register now button, sign up, and then that'll give us your email. And then just go to the basic members page and scroll through. All the information you need to learn is all on this one page. And the easiest way I think everyone needs to at least start is to send your TradingView username to my support at hpc@sr-analyst.com. And I really urge everyone to get with the software, everybody here. Okay. Why? Because it's going to show you the properly measured harmonic patterns. There's other platforms that you can try. All of those are free trials. You don't need any credit card. The other thing is all the books, all 4 of them that basically define the subject I've released over the last 20 years are available. Just click and open the PDF and download, and you can reference all of that. And get with then the crew too. We have a Discord, all of that towards the bottom of the page, the videos. I do all this because I really think if someone wants to learn and study, you should have this basic resource information. And once you have the trial and you see the levels at work and you get that understanding, then subscribe. It actually makes my job easier, and for really what we're trying to do to just, you know, disseminate effective trading information for individuals without charging them anything to get started. I think all they need to be shown are the levels in action, and then people jump on it and they know what's going on here. I think Swooping Hawk can attest to that.
Yeah.
Great.
Yeah,
And,
certainly.
You've got a YouTube as well, haven't you, Scott? So you do streaming on a regular basis yourself, right?
Oh, yeah, we're Monday, Tuesday, Thursday, and that's all available here. Just hit the G+ and just subscribe there. Twitter too, and we've got some Facebook group, but check that. And I do it every day. We show real examples, and we combine that with some education to just kind of walk through the 1-2 framework and apply that to all the craziness that's going on. And when you apply it, what it does is kind of sorts out all the noise. I definitely know that that's something that helps people.
Great. Okay. Well, I think I don't really see any questions in particular in the chat there, but I just want to say thank you from myself and from everyone in the chat for your time, for your insight, for your expertise on this. It's been fascinating. So yeah, harmonics are endlessly fascinating, the subjects, and it's that's why we love trading, really. So it's great to have your insight and to hear just everything about that. So thank you so much for your time. Don't know, Swooping Hawk, if there's anything final you want to say.
Yeah, I just wanted to thank Scott for his time, and it's very nice to talk to you and hear your insights.
Thank you. Thanks for having me, guys. We can do it again as long as Luke gets with the software.
I will. I'll make sure I'm on that. Maybe next time we can do a little.
Maybe next time. Then you come back and be like, "Yes,
I'll
this
show
software."
you a little bit on our software, and we'll do that at the same time. So as we're there, if anybody who is not already subscribed to this channel, if you want to check out toroscrypto.com, there's more information about our community here as well. But thank you so much, Scott. I would love to do this again sometime, and we can hash out some more TA and be looking at a lot more scenarios together and everything. But have a great evening, have a great afternoon, whatever time it is there now, evening. And we'll catch up soon, I'm sure. Thank you.
Thank you, folks. You guys have a great one. Take care.
Great. Thanks, everyone.
Thank you.
Bye.